Breaking news just hitting the tape this morning. With less than 24 hours to go before trading begins in the Coreweave IPO, the company has just cut their IPO offering from $2.7 billion down to $1.5 billion over worries about a lack of demand for shares in the data center GPU rental company. And if you listen closely, that sound you hear is the AI bubble bursting in real time. What's up, guys? I'm Nobody Special, and we got this one in Bloomberg this morning, right in the middle of my morning live stream. Coreweave is planning to cut the IPO size to just $1.5 billion. Coreweave intends to cut the size of its initial public offering to around $1.5 billion, a person with knowledge of the matter said, in a sign of how the recent stock market volatility is hurting demand for even highly anticipated listings. The cloud computing provider plans to offer investors about 37.5 million shares at $40 a piece, according to the person who asked not to be identified because the info is private. That'd be down from an initial plan to sell 49 million shares at $47 to $55 each. That could have raised as much as $2.7 billion. Now, even that $2.7 billion is cut from an original $4 billion IPO that Coreweave planned to offer. So this is the second time in 2 weeks Coreweave has had to cut the offering because they're worried there's not enough appetite for shares in this company. And while they were initially seeking a valuation of up to $35 billion, this latest iteration of their offering brings their valuation down to just $23 billion. That is a pretty serious decline in just 2 weeks. Now, again, this is very important because they're cutting this offering nearly in half just 1 day before trading is set to begin. And it's also just 1 day after we got this note from TD Cowen that said Microsoft, Coreweave's biggest customer, has now canceled 2 gigawatts worth of data center projects. Now, back in February, TD Cowen made waves when they released an analyst note that said Microsoft was cutting back on several hundred megawatts worth of data center projects. That's something Microsoft kind of denied, kind of didn't, and of course Coreweave was very much in denial that this was happening. Now we've got TD Cowen saying, no, it's not several hundred megawatts, it's actually 2 gigawatts, including projects in the US and Europe that had been canceled as recently as the last month. So this goes to show you this great game of CapEx chicken is finally coming to an end. Microsoft is first to blink, although it's worth pointing out that the article mentioned Google and Meta did scoop up some of that capacity, but not all of it. This just goes to show you they're talking about an oversupply of compute. They built too many data centers, and of course Coreweave has been borrowing money like drunken sailors in order to buy up these rapidly depreciating GPUs in order to build their GPU rental business. And when we got a peek at what that business looks like in their S1 IPO filing, it kind of read like the end of one of those pharmaceutical commercials where they start listing all the side effects and say pretty much, I dare you to take this. Well, Coreweave's S1 filing read like, I double dog dare you to buy shares in this company. And that wasn't the only bad news that hit Coreweave yesterday in the lead up to this cut to the IPO filing. We also got this one in the Financial Times, talking about how Coreweave triggered a technical default in a multi-billion-dollar loan from Blackstone when they spent money from that loan on data centers in Europe, when the terms of the loan clearly stated that the collateral, those chips they were buying, had to be housed in the United States. Now, the company was very quick to dismiss this. Oh, it was just an administrative error. It was just an accident. But an entry-level paralegal could have spotted this mistake before it happened. This is indicative of a company that has always played fast and loose with the rules, just pushing things to the edge of what they can get away with. And of course, Blackstone did nothing about this because Blackstone is one of the largest shareholders in Coreweave, and they're one of the firms that's selling into the IPO, so they're not going to shoot themselves in the foot 2 days before stock starts trading. And as the bad news continues to pile up for Coreweave, we've got their benefactor, NVIDIA themselves, riding to the rescue. Check this one out on Twitter this morning from Walter Bloomberg. NVIDIA will anchor Coreweave deal at $40 a share with a $250 million order, according to CNBC, citing a source. So Coreweave, one of NVIDIA's biggest customers, which NVIDIA has loaned money to and also taken a stake in order for that company to buy NVIDIA's chips, NVIDIA is now saying, it looks like this IPO is not going to go so well. Don't worry, we'll buy the shares if we have to. We're going to set a floor at $40 a share. In other words, NVIDIA can't let their own customers' IPO flop because, well, what would that mean for NVIDIA's stock, which has been the poster child for the AI bubble? And so they're taking Roundtripping even one step further, bidding up the IPO themselves. And even that is just one day after we got this one in data center dynamics. NVIDIA in talks to acquire server rental company Lepton AI, according to a report. Now, Lepton AI is one of the smaller hyperscalers, a hyposcaler, if you will. They're like Coreweave, only much smaller, and they're also one of NVIDIA's customers. And here's NVIDIA saying, we are going to buy one of our own customers. Well, I guess that's one way to drive your sales higher. If you liked Roundtripping, well, you're just going to love double secret Roundtripping. Better blow harder, Jensen. This thing is losing air fast. So long story short, the Coreweave IPO has already flopped and it hasn't even started yet. They've gone from $4 billion down to $2.7 billion, now down to $1.5 billion. The valuation of the company has fallen from an anticipated $35 billion down to $23 billion. It's pretty clear the consensus on Wall Street is that these guys should have IPO'd last year, but of course that's back when Michael and Trader and his fellow founders were too busy personally cashing out when they sold nearly $500 million in shares in a secondary offering. Now, I've been trying to raise the alarm about Coreweave since August of 2023 when I first did that interview with Samantha LeDuc about how suspicious that $2.3 billion line of credit from Blackstone was and how that number aligned almost perfectly with NVIDIA's data center beat in that quarter. I also pointed out how the Magnetar trade and Magnetar Capital's involvement in this company was highly suspicious. I drew attention to Coreweave founders' history of running carbon credits through shell companies in the Cayman Islands, something that's not necessarily outright illegal, but criminals always do that. And of course, the financial press said I was a Twitter rando, don't listen to this idiot conspiracy theorist, just aimlessly bid up these stocks. That was several $1 trillion worth of bubble ago. I wonder if anybody is having regrets about that now. And since then, we've had the S1 filing that showed that Coreweave has a 62% exposure to Microsoft, something that has since declined dramatically. OpenAI has stepped in to try to fill that void. We'll see if that works. I've also pointed out things like the Cicerex pump and dump scam, where Coreweave got involved with the company right before the stock shot up several thousand%, only to become next to worthless as Coreweave and other people sold out. And I have drawn repeated attention to the round-tripping schemes that have run rampant through the AI mania, as Wall Street gives money to AI companies and AI companies feed that money right back to NVIDIA in order to finance the data center buildouts. But at the end of the day, there is no profits underpinning this entire bubble. Not one AI startup has ever turned a profit. Every single prompt that has ever been entered into ChatGPT or Copilot or any of those other large language models, every single prompt has lost money. So if all of these businesses lose money, where is all this value coming from? Well, it's coming from the smoke and mirrors that has created the AI bubble, and Coreweave has been at the center of all of this for more than 2 years now. It's something I've been trying to raise the alarm about and nobody wanted to listen. Well, tomorrow we find out just how much damage this is really going to do. Till next time, live small and dream big.